Hello friends, welcome to yet another session of CAPET CIA Part 2. We got a really good response for our Part 1 series, and that is where I have come up with the new series for CIA Part 2. I'm your coach Kamaljeet, and I'm once again here to help you with the preparation of CIA Part 2. I'm sure most of you might have come to this long by cracking Part 1 exam, and I'm sure you would have a lot of experience now as to what kind of questions come in part 1. As and when we move ahead, part 1 checks more of a remembering skill. Part 2 is a little bit more an application oriented exam, and when you move to part 3 is absolutely scenario based, where exactly what the examiner wants you to understand is the application of the concept. So as and when we proceed ahead, we will know more of a scenario based question will be coming in the examination. I've heard a lot of students talking about the difficulty level in exam. Many of the students thinks that they have prepared really well, but when it comes to cracking the exam, unfortunately, they are having tough time to crack. My experience in the field says that couple of things we need to remember while giving the examination. One, that most of you might have practical experience in the audit field. That experience definitely does count in the examination, but due to that experience, sometimes we overthink. And since it's an MCQ paper, overthinking can be very dangerous. So that should be avoided. Secondly, the recent pattern of examination suggests that most of the scenario based questions are being asked. That is exactly where you need to have really good conceptual clarity. If your concepts are not clear, it will be very difficult for you to crack this exam. Most of the options which come in the examinations are correct. So for example, a particular question has 4 options and probably you might think that all 4 are correct. I won't deny that if all 4 are correct. So what exactly is the question? Question wants you to tick on something which is the best answer for this scenario. And that is exactly how we have to prepare for the exam. So before we proceed with the first chapter of our part 2, let's understand these basics. Because in part 2, they'll be giving you more scenario based question where you need to have really good understanding of the concept. Also, my suggestion is that once you learn the concept, once you have done with that particular chapter, it is important that you do more of the scenario based question from that chapter, whether it is given in the study text or from wherever you are studying it. If you follow these small things, most probably you'll be able to crack your exam within one go itself. Now that's all about the basics, how we have to start the preparation for the part 2. Now let me take you to the journey of CIA part 2. The first chapter of this part 2 is where they talk about strategic and operational role of internal audit. So content wise, this particular topic has various topics inside. It talks about the basics of internal audit. It does talk about the role of audit committee and chief audit executives. And also it consider a very important element called ethics. What is the role of ethics in the business and how we as an auditor can help business maintaining those ethics. And last but not the least, we shall be talking about change management inside the organization. So that's the agenda for this particular chapter called strategic and operational role of internal audit. If I weigh this particular chapter from examination point of view, this chapter is pretty important. The concepts which are given here, like ethics and change management, are not theoretical concept anymore. Whether you talk about corporate governance, you talk about CSR or corporate social responsibility, all these concepts keeps coming. And now most of them have become part of compliances. So that's where auditors' roles are very important. So I would suggest that when you study that chapter, please try to be as clear as you can in concepts. So let's understand this chapter called strategic and operational role of internal audit. So before we start, let's understand what is internal auditing. Internal auditing consists of three or four important elements. One, that internal audit is independent activity, it's an objective activity, it's an assurance and consulting. So basically the definition of internal auditing has only four important elements: independent, objective, assurance and consulting. You may not find the consulting word in the external audit. Largely, external audit also is an independent activity, it's an objective and assurance. However, the consulting part is missing. But since we are talking about internal audit, we have to deal with all four elements. So now let's understand how internal audit work. So we understand the purpose of internal audit is not to just check the compliance part, not just to make sure that company follows the accounting standards or not. Yes, that is definitely a part of internal audit. However, the definition of internal audit is much wider. We also evaluate a lot of activities inside the organization which make sure the company is able to meet its objectives. Every company has certain objective. Why do they survive? And that's where three important things comes into picture called governance, risk management and control. As an auditor, our task is to make sure that these three activities are efficient and sufficient inside an organization. So that is where we as an auditor evaluate these three activities, and if required, we consult the management to improve the effectiveness of it. So let's talk about the first element called governance. What is governance? Governance is a simple word, a set of rule, regulations, policies and procedures. So how governance for an organization? Set of rule, regulations, policies, procedures through which a company is governed. It's called governance. The risk management. Every company has to take risk. Smaller, larger, entirely depends on the company's industry and the size. However, it is important that management assess the risk, identify the risk, map the risk, and mitigate the risk properly. So that's exactly what we call risk management. And when it comes to control, every company has limited resources. So how economical they are in controlling the resources, how they are controlling their human power, how they are making sure the company is managing their risk, all these parts comes under controlling. So these three activities are primarily taken by management, not an auditor. However, our task is to evaluate and help in improving the effectiveness of these three activities called governance, risk management and control. So now if we say what is internal auditing? Internal auditing is an independent objective assurance and consulting activity where these three tasks are primarily taken care. There is a performance standard 2100 which deals with the similar kind of thing. Which says there are three main factors involved: governance, risk management and control. So basically auditors need to use a systematic approach to evaluate it, and whenever they find any kind of loopholes there, they have to really consult. They have to talk to the management and help improving it. So that is how performance standard 2100 works. Now the word comes, what is the meaning of adequate? In auditing, every single word has its own meaning. So we understand that these three activities are taken care by management. We also understand that auditor need to evaluate and see their efficiency. Then auditor has to give something called reasonable assurance. So first let's understand what is the meaning of assurance. In a normal language, assurance means increasing the confidence of user. So when an auditor gives assurance, it gives confidence of the user of information that the information is correct. They are more confident in using that information, and that is exactly what we call assurance. So here also, when we talk about these three factors like risk management, governance, and control, here the auditor need to give a reasonable assurance that these three activity works efficiently and effectively. So how we decide whether it is adequate or not? So 2 points we generally use: efficiency. Efficiency means whatever is the task, the performance objectives are accurate, they are timely, and they are economical. So these three factors can be used to check efficiency. When we say economical, how good the management is to use the resources. So if I talk about say risk management, so how the risk can be managed in the least cost with the minimum use of resources, that is where I would say that risk management is adequate and efficient. And here we give reasonable assurance that yes, it does exist properly. From examination point of view, if I pick up the question from here, if the question ever comes related to reasonable assurance or maybe adequacy of risk management or governance, just try to pick up certain points from the question. For example, these 3 points which I have highlighted here: accurate, timely, and economical. So if you're talking about efficiency, stick to these 3 points. If you're talking about economical, stick to the minimum use of resources, minimization of the cost, and so on. Every time you get a question in examination, question does have a hint for you. We really have to pick it up. So that is how we define what is the meaning of adequacy and what is reasonable assurance. Now let's understand what type of internal audit engagements can we have. So basically the internal audit engagement can be of two types: assurance and consulting. Assurance, as we just discussed, assurance is something which gives more confidence to the user of information. So when an auditor gives assurance on certain factor, whoever is the user for that information feels more confident about it. So assurance services example may include say assurance on financial performance, it could be system related security, it could be related to due diligence, and so on. So that is an assurance services. Internal auditor may also have something called consulting. Consulting services where we advise management. For example, how to strengthen the internal control, how to make your risk management more effective and economical, and so on. So that is also part of internal audit engagement where we do consult. So that is called consulting services. So example of consulting services may include say training of the staff, advising them, counseling them, and so on. So that is how we say that these are type of internal audit engagement. And then internal auditors or maybe CA, Chief Audit Executive, do have certain administrative activities also. So administrative activities of CA may include how to make their internal audit activity better. So that may include a normal routine transactions such as budgeting, human resource management, the communication management, and so on. So that is where the internal auditor's administrative task comes into picture. So now we have understood the basic of internal audit as to what is internal audit, what are the engagements we cover. Now let's talk about the relationship of audit committee and board. Who heads the audit committee? The CA, Chief Audit Executive. So basically, it is important for us to understand what is the relationship between audit committee and board. Generally, audit committee is considered as a subunit of board only. However, there are a lot of different countries have their different statutory requirement for it. But before that, let's understand the basics of it. So basically, the CA, in order to have independence, in order to run the work properly for internal audit, it is important that CA or the board audit committee should have free access to management and the board, so that whenever they want, they can always go back to them and they can communicate, whether it is related to the finding of audit or it could be any other important matter such as risk management, fraud management, and so on. So basically, there are two types of reporting which occurs. There's something called functional reporting. Functional reporting is a reporting where the CA access directly the board. So he reports directly to the board. We call it functional reporting. When we talk about administrative reporting, here the CA basically reports to management first and then it may go to the board like that. So these are two types of reportings which are there, functional and administrative. In which circumstances which will be required, it entirely a circumstantial matter. However, it is important that in any case, CA should have a free flow of access with management so that whenever he wants, he can contact management and board. So as I said, and I initiated this discussion where I said that audit committee might be a subunit of board. But that is where the problem might arise that not every board member may be skilled enough to head the audit committee or be a part of audit committee. So that is where certain statutory requirement in some countries may include that at least one board member need to be finance person or a specialist in finance, or any company which is listed need to have an audit committee, or a, a board member should not be employed in any other capacity other than a board member. So that entirely depends on the statutory requirement of a particular country. But in nutshell, we can say that the CA or the audit committee should have a free flow of communication with the board. So once we have understood the basic function of audit committee, it is time for us to understand another important aspect called governance. So there's a performance standard 2110 which talks about the governance part, and we understand that the management has to follow their own governing role, which we just discussed in the beginning itself. But at the same time, the auditor also has a role to play, and that this role is called strategic role. So basically, as an auditor needs to make sure that company's governance is being done and it is being done properly. When I say so, now we understand that ethics is a very, very important thing to use in a corporation, and that's exactly where we have to understand whether the company follows ethics or not. What you have to understand is that ethics always flow from top to bottom, never from bottom to up. Whether the company is following ethics or not, up to what extent as an auditor you can rely on the information given by management, it depends as to how ethical the company is. What is the culture of organization? What is the management's thinking? And that is what we have to discuss called ethical climate. Issues in business ethics. What are the issues which could be an indicator the company is getting into unethical practice? The one, the company doesn't follow the laws. So there are not compliances which are being happening in the company. That is one of an indicator the company might not be following ethics. When the company denies to follow their own social responsibility, that is another indicator company doesn't want to get into it. Conflict of interest. Companies non-transparency in reporting. When it comes to bribery, the company seems to be okay with giving and taking bribes. Now, those could be certain issues which may be related to business ethics. And since there are issues, we need to understand this issue better. As an auditor, you can always help an organization coming out of this particular ethical dilemma. But before that, you have to understand what exactly is the problem with the company. So there are two important factors we need to understand: organizational factor and external factor. When I say organizational factor, this is an internal factor. So there are certain internal components in the organization which pushes an organization to do something wrong. For example, whenever there is a more of emphasis on strict chain of command, the company might do something wrong. For example, I'm working in a finance department. Whatever my CFO asks me to do, I do it because I have to follow that chain of command authority. Now that is where the line of ethical and unethical can be crossed very easily. Another example of organizational factor could be any internal pressure. For example, you may find a lot of bank executive at lower level who copies the signature of a customer. Now that is absolutely unethical. Why do they do it? They do it because they have lot of target pressure on them. They will push to open so many accounts in a day that they have no option but to get into it. So I'm not justifying the act of theirs. What I'm trying to raise a point here is that this is an organizational factor. Now that is where the company or the employee might get into something unethical. There could be certain external factors which are outside an organization, such as competition pressure. But a company is not growing at the speed where competitors are growing at, the company might get into something wrong. There could be cultural issues also. For example, in certain cultures, taking bribe and giving the gifts could be fine. In certain culture, it may not. So that could be another factor which may become a problem, and that is what we call cultural issues. So ethics are a very important portion of an organization, and as a CA, you have to make sure the company has an ethical environment. How will we make sure that ethics are being followed? So we have to follow certain steps. There are certain responsibility of an auditor which directly or indirectly is connected to ethics. When an auditor is able to find those points and filling those responsibility, they'll understand that the ethic is being followed or code of ethics are being followed. For example, when you check whether the company is following the statutory or regulatory norms or not, whether the compliances are happening on time, that is one of the elements. The second point which you can see is that how company is following social expectation. We understand there is a difference between stockholder and stakeholder. A company is not just responsible for stockholder, but they are actually responsible towards stakeholder. So you have to make sure the company follows that social expectations. The third is providing benefits to society and specific stakeholders. Here we are talking about CSR, corporate social responsibility. And finally, the company has to report fully and truthfully. And that is the core of corporate governance also. So company cannot be choosy in disclosing the information. They have to disclose every single thing what is happening, and they have to do it transparently. And that is where we say report fully and truthfully. So that is how ethics comes into picture when it comes to internal audit. Now let's move to another important segment called Performance Standard 2050, which is related to coordination. As an audit committee's head, a CA has to coordinate with all kind of internal and external audit assurance activities. So that is where he has to coordinate with all the department so that the all audits, be it internal audit or an external audit, they get sufficient information on time, and they can also coordinate the related activities. So that is an important aspect of coordination which is covered under Performance Standard 2050. There are two types of methods, assurance mapping and combined assurance model. When I say assurance mapping, that is where the auditor or the CAE has to map or coordinate both internal and external assurance providers, whether they are related to internal factor or external factors. When I say combined assurance, we are basically talking about all second line of defense activity. For example, compliances. We are basically talking about how the assurance model is being coordinated, the combined second line of defense. So that is how Performance Standard 2050 coordination and reliance comes into picture. So by now we have understood quite a lot about audit, be it related to the CAE's role. We talked about the relationship between management and CAE. Now let's move to another important segment called change management. Change is part and parcel of life, and so is an organization. Every organization goes through small or big changes. The changes could be related to product, changes could be related to processes, changes could be related to the hierarchies in the organization. So this particular segment will be dealing the important aspect called change management and how auditor can play any role in change management. So what is change management? Changes where company, any kind of changes are doing. For example, the company used to follow the manual accounting system. Then they moved to computerized system. It was change. The company from ERP moved to SAP. It was another change. So that kind of things comes under change management. The change management includes certain steps. The first, identify what kind of changes are required. The detail of the changes, how we gonna approach to those changes, how we will implement it, and how the changes will be monitored. Now that 4-5 steps are part of change management. So we understand that in order to grow, the company has to get into change management. But at the same time, whenever changes comes, it comes with resistance. It could be resistance from employee, it could be resistance from a different stakeholders whenever it comes to change. So in the definition of change management is just not include the changes, but also include how to deal with the resistial change. So before that, let's understand the type of changes. When I say cultural changes, where we are changing the attitude and mindset, that is a cultural change. For example, the companies never thought that quality of product can be very important. And then that comes the concept of TQM, total quality management. And every company understood how important for a company to follow TQM. That was a cultural change. Product change. Suppose company was making a product. For example, let's take an example of Apple. The Apple said that we shall only make phone in monochrome. So we will make phone either white or black. Up to an extent it worked. But when the competitor came up with the different colors, they had no option but to come up with the colors also. And that is called product changes. So whenever there are certain changes in the product's attributes, uses, customization to give more flexibility to customer, we are basically talking about product changes. And then comes structural changes. The company might go through different kind of structural hierarchical changes. Sometimes companies go through merger, acquisitions, they could be vertical integration, horizontal integration. That's where the structural changes comes into picture. And with structural changes, there are a lot of things changes in organization. So change management comes, of course, it is definitely important for companies to meet an objective. But as I said in the beginning, it always comes with resistance. For example, sometimes employees do not understand the kind of changes which are happening and they resist. Sometimes they misunderstand the concept, they resist. Sometimes the timing of change can be very bad, resistance. Sometimes it could be conflict of interest. A change may not be in favor of certain stakeholder or resistance. So there can be a lot of reason why people resist to it. And there are different business management models which try to deal with the resistance in change. So basically management, whenever they are going through change, they cannot do a random change. It has to be in systematic managed way so that all the stakeholders can be taken together. And that is where the resistance can be dealt with in proper manner. So that is where we have to understand how to deal with resistance and how to go about change management. There's a famous model by Kurt Lewis. So Kurt Lewis three-stage model. It's a very old concept, still very significant and relevant. The first stage is called unfreezing. The unfreezing is a stage which is also called a diagnostic stage. So basically, you have to prepare the employee for the change. You have to understand their mindset. You have to prepare them for the change. You have to tell them why they are making the changes and how important and good for them to make these changes. That's what we call unfreezing. So basically, we are trying to offset the resistance by preparing the people for it. The step number 2, we change. So we basically come up with the new changes. It could be change in the style, could be come up with the new SAP ERP system, any kind of new reporting format, anything. So we change. And step number 3 is refreezing. So we started with unfreezing. I'm going back to refreezing. So when I say refreezing, I want to make sure that whatever changes we have done here, employees should not go back to the older system. So let's kind of temporarily make it permanent at refreezing stage. Whatever changes you have done, let's block it for some time. Else, if you will not do this refreezing step, after a while, people will go back to the older model. That is where we have to go for refreezing. So that's 3-stage model: unfreezing, change, and refreezing. The leadership has a very important role to play when it comes to change management and how to manage the conflict. So entirely different thing which needs to be considered by management as to what is the speed of change, what kind of information is required, what could be the amount of power is needed, what is the level of resistance, and how much strength and pressure of change is there. Leadership style could be participative when they want employee into decision making. Whenever you get into participative mode, the resistance can be definitely lowered down quite a lot. Could be education and communication. With increased education and communication, people will understand why are you doing this. Facilitation and support, where we counsel people so that they can overcome the fear and anxiety. Then comes some kind of manipulation and cooperation also. Not every time people understand. So you might have to use some kind of diplomatic method also to deal with it. Negotiation, where the company unions, trade union, etc. can be used. And finally, the power or coercion can also be a method where you have to force people to follow. Though it is not highly recommended method, but entirely depends on the situation. So that is what we call change management. Now, how auditor comes into picture when it comes to change. So basically, a company, though it is not primarily an auditor's task, however, the auditor can always overlook as to how the companies go about change management. So with auditors' own experience, knowledge, they would know how much they can rely on it. Sometimes change would not be good for the company, and company may not able to meet their set objective. So that's where auditor has to overlook and evaluate the process. Then comes risk management. At this stage, I'm not covering too much of risk management because we do have very detailed chapter on risk. So I'll be discussing more about risk there. Broadly, a company has ERP framework, enterprise risk planning, and ERM framework of COSO. Primarily deals with how company manages the risk. So if I try to jot down the risk management part, the first step is identification of risk. Step number 2, the risk mapping, how critical that risk is. Step number 3, where we understand as to how to mitigate the risk, how to deal with the risk. And fourth step is monitoring. Risk is never a constant factor. Not like that the risk will come and will stay same to same risk forever. So risk keeps changing, and that is where performance standard 2120 deals with the risk management. So we shall talk about the risk part quite in detail, as it's a very important portion to discuss. Here just a summary of it. And then comes QAIP, Quality Assurance and Improvement Program. So everything comes with the quality. Quality has become very significant, important portion for this. So CA must develop and maintain a quality assurance and improvement program which could cover all aspects of internal audit and assurance activity. So basically, the QAIP is related to every part of organization, be it audit, be it managing of operation, be it running the operation, and so on. In fact, you talk about IPPF, it also deals with quality. So basically, CA must develop the maintain the quality assurance, the improvement program that cover all kind of internal audit activity, and that should also include the supervision, periodic assessments, and quality assurance, so that CA will make sure that the audit is happening with the quality. So that is what we call QAIP. So that was largely the main content of this chapter called Strategic and Operational Role of Internal Audit. This chapter consists of different elements. Some part of this related to ethics, some part of related to change management, and so on. The kind of question which seems to be more probable from this chapter might include the scenario based question, could be related to resistance of change, could be related to ethical dilemma, and so on. So my again suggestion will be stick to the points what you have read and understood. If you have read certain points, maybe in your study text or while understanding the concept, generally question wouldn't go above and beyond it. You'll always find certain clues in the question which will tell you as to what kind of concept needs to be followed, and avoid overthinking. Whenever scenario based question comes, we always get into overthinking mode, and that may be very problematic. So that is how we can deal with this particular chapter, where we understood the strategic and operational role of internal audit. So that is all about this chapter. And so basically, if you really want to subscribe the complete series of our CAPES COE Part 2, you can get in touch with us. Here I'm giving the contact detail. So that is the phone number. Our website is www.onlineglobalcareer.com. You may find all the contact details there. You can get in touch with us for any kind of query suggestions. In fact, we have created a WhatsApp group also for CIA students. Please feel free to join us there, and let's meet up once again with a new series. Till then, stay tuned. Thank you so much.